Ladies and gentlemen, if you own silver, listen very carefully. You may only have a few days left before a massive shift hits the silver market. Prices are moving. What's coming could shock everyone from casual investors to big institutions. In this video, I'll break down exactly what's about to happen, why it matters to you, and what steps you need to take before it's too late. Stay tuned, because the next 2 days could be some of the most critical we've ever seen for silver holders living through the late stage of that cycle. Debt levels are at historic highs. Governments borrow more than they can realistically repay without devaluing their own currencies. Central banks create money at unprecedented rates, not out of strength, but out of necessity. They print to sustain markets, to manage crisis, to avoid recessions, to solve political pressures. People see the stock market rising and think everything is fine, but they don't understand that the rise is being manufactured. When money becomes abundant and cheap, everything looks like it's going up until it doesn't. In these moments, the danger isn't visible turmoil, it's complacency. People become used to low interest rates, easy credit, and ever-rising asset prices. They assume governments will always step in to fix problems. They assume inflation will remain low. They assume the system is too big to fail. History shows that every cycle's end feels exactly like this: calm, confident, and blind to the underlying risk. Crashes don't come from fear. They come from misplaced confidence followed by sudden realization. What makes this stage especially risky is the combination of three forces moving together: high debt, political conflict, and global power shifts. When these three overlap, the end of a cycle becomes more disruptive. High debt forces governments to choose between defaulting, raising taxes, or printing more money. None of these paths are painless. Political conflict grows because economic stress divides societies. Some want more spending. Others want more austerity. Like global power shifts add pressure as rising nations challenge existing systems, creating geopolitical friction. When all three converge, stability becomes harder to maintain. At the end of long-term cycles, money stops being a reliable store of value. People start feeling that something is off. They may not understand economics, but they notice their savings by less. Their salaries don't stretch as far, and assets feel harder to afford. Inflation isn't just about prices going up, it's about trust going down. When trust fades, people turn to what they believe is real: land, commodities, precious metals, and anything that cannot be created by decree. The system doesn't collapse in a dramatic flash. Rather, it transitions. Governments try to manage the decline. They raise interest rates, then lower them. They tighten spending, then loosen it. They promise stability while quietly preparing for emergency measures. These actions buy time, but they don't reverse the cycle. They slow the fall. They don't prevent it. The underlying forces, debt, inflation, geopolitical tension, move in predictable patterns regardless of policy. Understanding where we are in the cycle gives you an advantage. Most people don't have perspective. Instead of being surprised by events, you see them as inevitable steps in a long arc. You stop looking at day-to-day noise and start focusing on fundamental truths. And the most fundamental truth at this stage is this: the financial system is closer to transformation than continuation. The world won't end. The system will change. It always does. Periods like this require realism, not hope; strategy, not emotion. The worst thing you can do is cling to old assumptions. The best thing you can do is prepare. Not by predicting exact dates or outcomes, by understanding the nature of the cycle. At the end of long-term cycles, wealth shifts from paper promises to real value. The people who navigate this stage successfully are those who accept reality early, diversify wisely, and stay open-minded to change. The signs are all around us: rising debt, rising conflict, rising inflation, and rising global instability. None of this is random. It's the natural final phase of a long process, and because the forces behind it are structural, not temporary, the transition will continue whether we acknowledge it or not, living through a moment that future historians will study. They will analyze how we handled the decline, how we adapted, and who benefited from understanding the cycle early. Right now, the most important thing is awareness. Awareness that we are not in a normal period. Awareness that cycles don't break. People do and they ignore them. Awareness that the decisions you make in times like these determine whether you preserve or lose what you have built. We live at the end of a long economic and monetary cycle. That isn't something to fear. It's something to understand, because once you understand it, you can navigate it with calm clarity and strategic thinking while others react emotionally. And in times like these, that difference can mean everything. Silver, like other hard assets, has a long history of acting as a hedge. The idea of a hedge only makes sense if you truly understand what you're hedging against. Most people misunderstand this. They think a hedge is a guarantee, a kind of magical protection that saves them no matter what happens. That's not how it works. A hedge is only effective when you recognize the risks early and position yourself before the environment changes. Once the regime shift is visible to everyone, the opportunity is gone. The price has already moved. The panic has already started. And what was once a strategic advantage becomes a crowded escape road. By then, it's too late. Hard assets, especially silver, protect you because they are not tied to the promises or policies of governments. They don't depend on interest rates. They don't lose value because of political mistakes, and they can't be devalued by printing more of them. That protection isn't automatic. It requires timing. Not the timing of guessing market tops or bottoms, the timing of understanding when the underlying system is reaching a point where paper assets are becoming increasingly fragile. Most people wait until the system visibly breaks. They wait for inflation to explode, for currencies to fall, for markets to collapse. They wait for headlines, for panic, for confirmation. But by the time you see those signs on the surface, the shift beneath the surface has already happened. Hard assets behave differently across different monetary regimes. When trust in currency is strong, when interest rates are real, when debt is manageable, silver feels slow, unexciting, even unnecessary. But when trust weakens, when money loses its purchasing power, when inflation eroded savings, when central banks resort to extraordinary measures, suddenly hard assets move from being irrelevant to essential. A regime shift is not a single event, it's a transition. It begins quietly with subtle movements in inflation expectations, currency weakness, and debt accumulation. And then it accelerates when policymakers start using tools of necessity instead of tools of strategy. Eventually, the shift becomes obvious. People lose faith in the old system, and they look for something real, something outside the reach of political decisions. Silver becomes valuable in those moments, not because something magical happened, but because the environment changed, and anything real, anything that can't be created, it will gain importance. But here is the critical part. The hedge only protects you if you established it before. Trust collapses, not after. Once people rush towards silver, the price simply reflects their fear. You don't want to act in fear. You want to act in understanding. The worst decisions are made emotionally. The best decisions are made when the picture is clear, long before the crowd recognizes it. Think of it like insurance. You don't buy fire insurance when your house is already burning. By then, it's not insurance. It's a regret. You buy insurance when everything looks normal. When the risk feels distant, when others think you're being overly cautious. That's exactly when a hedge is most valuable. And silver is a form of insurance against a specific kind of environment. One where money loses reliability. The biggest risk people face isn't economic decline, but it's ignoring economic reality. It's assuming that the system will continue as it always has. It's believing that central banks can solve every problem, that governments can manage unlimited debt, that printing money has no long-term bomb cost. That assumption blinds people to danger. At the end of a long-term cycle, those assumptions become the very thing that destroys wealth. Child doesn't care about assumptions. It simply responds to the environment. And when the environment moves from stability to instability, silver reflects that shift. Another mistake people make is treating silver as a speculative bet. A hedge is not speculation. It's not something you sell just because the price didn't move fast enough. It's not something you buy expecting a quick gain. A hedge is something you hold because you understand the risks you cannot see yet but know are coming. You prepare because preparation gives you freedom, freedom from panic, freedom from being trapped, freedom from being forced to react at the worst possible moment when an economic regime shifts. Wealth moved from those holding paper promises to those holding real value. That pattern has repeated across every major cycle in history. Whether it was the fall of past empires, currency devaluations, inflationary spirals, or debt crisis, the people who preserved their wealth were not the ones who trusted paper. They were the ones who trusted reality. Silver is part of that reality. It exists outside the financial system. It does not depend on trust. It only depends on itself. This doesn't mean silver is the answer to every problem. No hedge is perfect. But in a world where currencies are being stretched, where debt is expanding faster than income, where inflation is not a temporary spike, but a structural outcome, having a portion of your wealth in something real is not just sensible, it's necessary. The key is not how much you hold, when and why you hold it. The most important truth is this: once the shift becomes obvious, the opportunity disappears. You don't prepare for storms when the clouds are already overhead. You prepare when the sky is clear, because that's when the preparation actually gives you protection. Those who recognize risk early will navigate the transition with stability. Those who wait for proof will be left reacting instead of acting. A hedge is not a guess, it's a principle. With silver, like all real assets, rewards people who understand this simple truth. Protection is something you build before the world changes, not after. Now is the time for clarity, realism, and radical open-mindedness, not optimism, not denial, not the comforting narratives people cling to when the world becomes uncertain. Moments like this don't reward wishful thinking. They reward those who are willing to see reality as it is, even when it's uncomfortable. Throughout history, the people who navigate major transitions successfully aren't the ones who predict the future perfectly. They're the ones who are honest about where they stand, the risks are, and how quickly circumstances can change. Clarity begins with accepting that we are not in a normal environment. The systems we depend on, economic, political, social, are under stress. Debt levels are unsustainable. Inflation pressures are structural. Institutions are struggling to maintain trust. These are not signs of a stable cycle. They are signs of a cycle entering a transitional phase. Daniel's dangerous in moments like this because it blinds you to the consequences. When people deny reality, they tend to react too late. They assume that the past will repeat, that problems will fix themselves, that the system will stay intact, but could always has but cycles exist precisely because nothing stays the same. What worked in the last decade will not necessarily work in the next. Realism means looking at facts, not narratives. It means acknowledging that the world is shaped by forces larger than individual opinions. Forces like debt accumulation, inflation, rising inequality, geopolitical rivalry, and weakening currencies. These forces follow patterns. You cannot ignore them just because they don't fit your hopes. Realism doesn't mean being negative. It means being accurate. It means accepting that risks exist even when they're not visible on the surface. It means understanding that markets can stay calm while pressure builds underneath. And that calm is often the precursor to major shifts. Open-mindedness is just as important. When a system transitions, old assumptions become liabilities. People who cling to traditional thinking get blindsided. They rely on outdated models, old rules and habits that no longer apply. They assume central banks can always save markets, that debt can grow forever, that inflation will always be temporary, that geopolitical conflicts won't escalate. The truth is that every major shift in history forced people to rethink the rules. Those who refused to adapt fell behind. Those who questioned their own assumptions early were prepared. Radical open-mindedness requires humility. It asks you to recognize that you don't know everything, that your past experiences may not guide you correctly. Now it forces you to ask better questions. What am I missing? What if the things I believe most strongly are wrong? What if the environment is changing faster than I realize? This mindset is uncomfortable because it challenges ego, but it's necessary because transitions reveal the limits of old thinking. You can't navigate a new landscape without dated maps. Optimism and denial are the biggest threats in this kind of environment. Optimism tells people that things will work out simply because they have in the past. It encourages complacency. It tells them not to worry, not to prepare, not to think deeply about risk. But optimism without understanding is it leads people to take on more debt, assume more risk, and hold on to fragile structures long after they have begun to crack. Denial is even more destructive. It now pretends problems don't exist. It tells people that inflation isn't real, that currency devaluation is temporary, that political conflict is just noise, that doesn't matter. Denial is seductive because it offers emotional comfort. But comfort is poisonous when the facts point in the opposite direction. Denial delays action. Denial ensures that when reality finally breaks through, it breaks through violently. The time we are living in demands something different. It demands awareness. It demands preparation. It demands the ability to adjust your thinking when new information appears. Clarity, realism, and open-mindedness give you the tools to navigate uncertainty with strength. They allow you to see risk while others are still distracted. They help you recognize opportunities that aren't obvious yet. They prevent you from being trapped by old beliefs or blinded by emotional reactions. Clarity lets you see the terrain. Realism tells you how difficult the terrain really is. Open-mindedness shows you different ways to move across it. When you combine all three, you free yourself from the illusions that lead most people into trouble. You stop relying on assumptions and start relying on principles. You stop reacting to events and start anticipating them. You stop hoping the environment will adapt to you and start adapting to the environment instead. The world is changing. That's not something to fear. It's something to acknowledge. Every major shift in history created both danger and opportunity. And those who prospered were the ones who accepted reality early. They didn't panic. They didn't cling to optimism or denial. They observed clearly, thought deeply, acted deliberately, and adjusted quickly when necessary. That's what this moment requires. The future will not be defined by those who are the smartest or the most confident. It will be defined by those who are the most adaptable, those who can stay calm, see clearly, question their assumptions, and pivot when the environment demands it. In times like these, those qualities matter far more than hope. Now is not the time to close your eyes and trust that things will work themselves out. Now is the time to open your eyes wider than ever before. The transition we are entering will reward clarity and punish illusions. It will reward realism and punish fantasy. It will reward those who are open to new information and punish those who cling to old beliefs. This is the moment to think deeply, act wisely, and remain radically open to truths that may challenge everything you thought you knew. Having silver is not a guarantee, but having silver with a plan could be a rare chance. Hard assets alone don't save anyone. History is full of people who held something valuable, yet still lost everything because their decisions were reactive, disorganized, or emotional. The difference between those who survived major economic shifts and those who get swept away is never the asset itself. It's the strategy behind it. A tool without a plan is just metal. Any tool with a plan becomes leverage. And people often treat silver as if simply owning it ensures protection. It doesn't. Silver will not manage itself. It will not automatically preserve your wealth unless you understand why you own it, how you intend to use it, and what role it plays in your overall approach to risk. Hard assets behave differently depending on the environment. In stable times, they move slowly and quietly. In unstable times, they can become lifelines, but only for those who know how to integrate them into a broader strategy. The first part of that strategy is clarity about purpose. Why do you own silver? Is it a hedge against currency devaluation, a protection against inflation, a buffer against systemic instability, a store of value in case paper assets lose credibility? Each purpose demands a different approach. If you don't know the reason, you won't know when to hold, when to adjust, or when to rebalance. Silver without purpose is luck. Silver with purpose is strategy. The second part is proportion. People either overreact or underreact. Some buy too much out of fear, turning a hedge into a gamble. Others buy too little, thinking a small amount will save them in a major crisis. Both approaches are flawed. A hedge works when it's sized thoughtfully, large enough to matter, small enough not to destabilize the rest of your holdings. A hedge is meant to protect your broader portfolio, not replace it. That balance is what allows you to navigate uncertainty without being consumed by it. The third part of the plan is timing. Not timing the market, but timing the environment. You don't use a hedge when everything is already collapsing. By then, the price of protection has already risen dramatically. You use a hedge before the environment changes. The cost of protection is low, and the value of preparation is high. That window is narrow. Most people ignore it because the world looks calm on the surface. They wait for confirmation, for headlines, for panic. But by the time panic arrives, opportunity disappears. Acting early isn't about prediction. It's about understanding cycles and recognizing stress signals long before they become obvious. Another critical part of having a plan is liquidity. Silver is valuable, but illiquid silver during a crisis can trap you. If all your holdings are in forms that are hard to convert into usable resources, you may find yourself unable to act when you need to. A strong plan includes thinking about accessibility. What form of silver do you hold? How quickly can you access it? Do you know where you would sell or trade it if needed? Do you hold a mix of physical and paper-backed options? These practical questions separate strategic holders from hopeful holders. You also need to understand the emotional component. The value of a plan is not only financial, it's psychological. When crises happen, emotions overwhelm logic. Fear distorts perception. Panic leads to rush decisions. People sell at the bottom because they cannot handle uncertainty. A plan gives you something. Stable when the world becomes unstable. It gives you rules to follow when emotions tell you to run. It gives you structure when your instinct is chaos. The discipline of sticking to a plan is often more important than the asset itself. And then there is adaptation. No plan is perfect. A plan must evolve. When the environment changes, the world will not move in straight lines. Silver may perform well in some stages of a crisis and stagnate in others. A smart strategy includes periodic evaluation, looking at the broader economic landscape, recognizing shifts, and adjusting as needed. Being rigid is dangerous. Being adaptable is powerful. Adaptation doesn't mean reacting emotionally. It means updating your approach based on new information. The reason having silver with a plan could be a rare chance is because most people won't do any of this. They will either ignore silver entirely or buy it without strategy. They will move too early or too late. They will act emotionally or carelessly. They will hope instead of planning. They will rely on assumptions instead of analysis. In every major economic era, it didn't simply move to those who held assets. It moved to those who held assets wisely. What makes this moment unique is the environment we're in at the end of a long-term cycle where currencies weaken, trust in institutions declines, and people begin searching for something real. That environment creates rare opportunities for those who prepare early. Silver with a plan is not just protection. It could become a strategic advantage. It puts you ahead of the emotional crowd. It gives you clarity while others panic. It allows you to respond intelligently when others are reacting blindly. Having silver is not enough, but having silver is part of a thoughtful, disciplined, adaptable plan that is the difference between surviving a transition and benefiting from one. In times like these, that difference could define your financial future. So I say to you now, don't wait for the crowd to rush in. Don't wait for the headlines to scream crisis. If you wait until then, it will be too late. We are at a crossroads. The wheel is turning. The tension below the surface is real. The question is not whether there will be change, but how swift, how severe, and how many will be prepared. If you own silver, act with clarity, purpose, and courage. Because in the coming days, what you have may not just protect you, It may define your outcome. Remember, reality doesn't negotiate it. It unfolds. And those who understand it, not because they hope or fear, because they see those are the ones who survive. Thank you.